How many are we expecting, Carol, do you think?
At this stage, it could be anything between 10 and 20. I've had a few call-offs, regretfully, people just now have had things crop up.
Yeah, no, of course.
Yeah, so between 10 and 20, I would think. Do we know how many we have now that it's almost 12:30?
We are probably not too far off.
I think it's 14 external, Emily, on the participants list.
Oh yeah, 14 external. Yeah, so we're getting there.
Yes, Ricky, mine in London just arrived by phone. I'm just going to see if I can do it on my computer then.
Great. We'll kick off shortly.
Sure. So, just locked my computer, anything else. Oh, come on. What to do? Oh, get rid of this. Open. Oh, no. I just want to close that. I've got an error message on my computer. Hang on, let me close the Zoom.
It's always the way.
Where is that in? Oh, might have got rid of it. Well, the procedure entry code is wrong. How can that be? Oh dear.
Well, Carol, shall we get started anyway? We've just ticked over after 12:30, so maybe we should just make a start, and obviously we may get a few extras joining in over the next few minutes.
Yeah, that sounds great. And a very warm welcome to you, all three of you. I'm delighted that you've managed to push on and arrange this session online, the reduced in weeks. In Edinburgh on the 11th of May, and very well done. It's been a great effort on your part to make today's session. I'll leave it now in your hands. Thanks, Emily. I understand that once the speakers have finished, I'll nominate a few people from Aberdeen Capital to ask a few questions, but please explain how you'd like the whole thing to proceed. I'll hand over to you now, Emily, and thanks again.
Great. Yes, of course, I will do just that. So thank you, Carol, and thank you everyone for being here. It's great that we can do it online, as Carol says. Hopefully everyone can see and or hear. Seeing and hearing is always the best, because you'll get the slides as well as being able to hear what we're saying and obviously see our faces. There should be a few view options at the top right, so if you need to fiddle around with those, WebEx works in a fairly similar way to other programs you're familiar with, so hopefully that should all make sense for you. Just a quick note, as usual, if you wouldn't mind just muting yourselves if you haven't already done that. So at the bottom of the screen there'll be some black circles. If you hover over those, if you click red on the mute button, you should mute yourself. And that's just really as Carol says, you may have some time for some general debate later, but it would be great just while we're running through the presentations if you could just mute yourselves. That would be brilliant. Also, just to say, for the purposes of housekeeping, we are recording today's session. And that's really just so that others can listen in later if they want to. It'll be distributed, so just so you're aware that that's happening. So thank you very much for joining. And I think it probably was November, a very wet day in November, Carol, when we had our first discussion. And we thought there might be some merit in having a get together. And as you say, this was originally to happen in person, and it's just by virtue of these circumstances that we're all in, it's happening online. But of course, the good thing is that this expands the audience, I suppose, to a bit of a wider group. Just anyone who's joining, if you don't mind muting, that'd be brilliant, just so we can all hear what's going on. Thank you, that's bad. So just to introduce Womble Dickinson, some of you may have come across the firm before. I know various people do know the firm. But for those who don't, well, I'm getting a bit of an echo, so I don't know if someone can maybe just mute the last couple of joiners. Is that any better? That's a lot better, I think. So we are a full service law firm, and for the purposes of private client work, which is what we in my team at Rose's team specialise in, that's quite helpful. We're quite unusual in that sense. Sorry, I'm getting really bad feedback. I don't know, Rosie,
Emily, I'm just going through and trying to meet everyone.
Thank you.
Just bear with me, sorry.
This is ironic given what we're going to be speaking about. So I've unmuted myself, but I think that means everyone else is muted, so that's a lot better. Brilliant, thank you. Sorry, just to go back to where I was. So we're Womble, Dickinson, and we have offices in the UK and the US. In the UK we have 8, and in the US I think it's 18. And we are quite unusual, as I say, for a full service commercial firm in that we've got a large private client department. So we've got, I think, more than 100 fee earners at the last count. And in the private client space, we cover law, tax, trust accounting, charities, and financial advice. So a pretty wide spread. And we've also got Caroline joining us, who I'll introduce in a moment, and she's from our financial services team. So it's a great opportunity for us to work with her on this. So our theme today, I was saying it's ironic if we get any sort of technical issues, because our theme today is digital assets, technology and innovation in the world of private client and financial services. So that's a bit of a mouthful. But it is strangely appropriate given the circumstances we're in right now. So let me introduce everyone. So we have actually three of us all presenting from different locations in Edinburgh, although ordinarily Rosie is based in our London office, but she's returned to original home, but not just for the purposes of today's session, but she has joined us from the city as well, so that's great. So Rosie's going to speak first. She is a solicitor in our private wealth department, as I mentioned, based in London. Her specialism is contentious trust and estates. So I'm sure she'll give us some good anecdotes later on if we want her to tell any stories. But today she'll be talking us through legalities of digital assets. It's something that's really growing and of great interest, I think, within the private client market generally. So that'll be useful, I think. Next is me. I'm a managing associate in private wealth as well. As I say, based in Edinburgh, specialising in private client, sort of pure private client work. So wills, trusts, tax planning, and capital taxation. So I was in Newcastle for many years, but I moved back again to my original home of Edinburgh last autumn, and it's great to be back. And I'm going to talk to you about some of the ways in which we are trying to engage with the next generation of clients in terms of innovation and technology in particular, but just some of the thoughts we've had around engaging with our next generation. And finally, we've got Caroline. Caroline Dickinson is a legal director based in Edinburgh in our office here, and she's dual English and Scots law qualified. As I say, she's in our financial services team, and she's very unique in many ways, but has worked in-house and in private practice. So in-house within the UK banking sector, and she has a particular interest and experience in the innovation and fintech market. So that's really interesting for the purposes of today's session. She's going to talk us about some of the work she's been doing on financial inclusion, which is something that I didn't know a huge amount about until I started listening to some of Caroline's talks in this area. So I found it really interesting, and particularly about how it affects high net worth individuals and how we might look at technology as a potential solution to financial inclusion issues. So we'll each do about 10 minutes. After that, we'll pick up any questions. So as I've said, there is a question session towards the end, and there's a chat function. If you go to the bottom of the screen, there's a little bubble at the bottom, speech bubble. If you click on that, it's coming up the chat section, and you'll see that you'll be able to have messages in there. You can send them to one of the speakers, or you can send them to everybody. Send them through to everybody, and you'll be able to see them as we go along. Just anyone joining, if you wouldn't mind muting, thanks. That's brilliant. So anyway, I will leave it at that. Sorry for the extended housekeeping and introductions, but I'll pass on to Rosie, who's going to kick us off with a bit of an insight into digital assets. Thanks, Rosie.
Thanks, Emily, and hi, everyone. I'm Rosie. Like Emily said, I'm a solicitor in our private wealth team, and so I'm just going to talk to you a little bit about digital assets, the law and the future. So it's basically just going to cover kind of what digital assets are for our purposes, the law or lack thereof kind of surrounding them, and why this is an important issue for our clients and particularly kind of next generation of clients as well. So just briefly, this kind of sets out a couple of questions. So what happens to your assets when you die or lose capacity, which is the starting point of what I'm going to talk about. So if you lose capacity, for whatever reason, that might mean that you're no longer able to deal with your assets or make decisions about your assets, in which case, if you have a power of attorney, your attorney can take over for you, or the court might appoint someone to take over looking after your assets for you. And when you die, what happens to your assets and who they pass to is governed in England and Wales. It's either by a will that you've had done or you've done yourself, and if you don't have a will, what happens to your assets is governed by the intestacy rules. In Scotland, it's the same thing, except that additionally there's also forced heirship. So certain assets are kind of forced to be passed to certain beneficiaries. So I just kind of pose that question, and it's what, if we're taking instructions from a client about a will, or we're talking about their estate planning, it's if you died or lost capacity, what would you want your loved ones to have? Who do you want to inherit your assets, or who do you want to have control over your assets? So that's something that we ask people to think about. And so what I mean when I'm talking about digital assets, you'll see on the screen there's a kind of list. It's not an exhaustive list, but it's an example. So there's assets that have kind of obvious monetary value, so bank accounts, virtual currencies, like Bitcoin or whatever, those sorts of things. Stock portfolio information has monetary value in it. There's also other things that have more sentimental value, which can be just as or even more important for some of our clients. So, your photographs that you might hold on your laptop or your phone, your music library, blogs that you've written, email accounts, social media accounts, and that sort of thing. So that's what we're talking about when we say digital assets. This slide is really just to demonstrate that digital assets make up such an important part of actually what we own and what we care about. So there's this figure here that I can't actually remember where I found it, but I'm sure it's probably even bigger now. But there's approximately £25 billion worth of digital assets in the UK. So it's a big number. And like I said, there's also sentimental value in photographs and things like that you might want your loved ones to have when you die. But there's some real issues around digital assets because after you die, what happens if you haven't given your loved ones or your executors the passwords to access these different accounts? Or if you've given them the passwords, what if they don't have clear authority to access or manage those accounts? And there's a kind of additional issue in that often terms and conditions for various accounts and websites, that sort of thing, it often says that actually usernames and passwords shouldn't be disclosed for confidentiality reasons. So there's just some issues to think about in terms of digital inheritance. And so in terms of the actual law, we obviously have law that governs succession, about wills and the intestacy rules, and also when you lose capacity, there are laws in place about what happens with all of that. But there's no kind of specific law or separate category of law dealing with digital assets itself. So we have to do, I suppose, the best that we can in absence of any specific law dealing with this. Social media sites have policies about what happens when someone dies. They can sometimes memorialise a page, although I know that in the news there's been instances of them not actually doing that and deleting a profile after someone's died, which can cause some upset to loved ones. And Facebook actually does allow you to nominate a legacy contact. So that's someone who could look after your account for you after you've died if you want people to still have access to whatever's on that account. Then other digital providers such as iTunes and Amazon, they actually provide the owners with a personal non-transferable license. So that means that you can have access to iTunes libraries and films and your Kindle books and all of the stuff that you might download from Amazon for your lifetime, but you wouldn't be able to transfer those items to a loved one on your death because it's just a license for your lifetime. And I know that when we spoke to some next generation clients about this, they were quite horrified that they couldn't have the option to pass their Kindle library on to a loved one, but there we are, that's what the position is. And yeah, Google has an inactive account manager where you can set up and specify what should happen to all of the digital information and who should have access. So we see Google encouraging some forward planning during your lifetime. So it's not perfect. I've noted there that the Law Commission in England and Wales has undertaken consultation back in 2017 on wills, which is still due to be reported, and we don't actually know when it will be reported. So it'll be interesting to see whether this will have any impact on digital inheritance, specifically, certainly for all the lawyers that work in this area. It's quite a hot topic, I would say, just because it's clearly an area of law that needs some policy work and development, but it needs that work because it's such an important issue. There's a lot of monetary value in digital assets. So much more of our life is digitised, and so much more of what we own and care about is digitised. And I know it's a bit of a cliche to talk about the next generation or younger clients perhaps caring even more than some of our older clients or older generations. But I think there is certainly a trend towards having lots of digitised information and assets, and I think that's what we're going to see even more of. So it's clearly something that needs to be considered and thought about. So I said in the meantime, before we get any specific law dealing with these types of assets, I've just noted a few things that we might suggest to our clients or to people that are thinking about their estate planning. And it's consider first of all what digital assets you actually have. I'm sure if you sat down and did an exercise really thinking about it, there's probably more than you might realise that you might want to consider passing or giving access to a loved one after you die or if you lost capacity. We recommend keeping records and updating them regularly. I think that's just the best way to be really transparent and make things easier for your executors or your attorneys after you die or lose capacity. I have noted the caveat there that be careful about invalidating insurance by writing passwords down. So there might be consideration as to some more secure methods of keeping records. So, for example, I've seen that there are some websites that offer kind of inheritance storage online arrangement where you can keep all of your information. Or actually, we often have clients that give us an Excel spreadsheet of all their digital assets, and they ask us as their solicitors to keep it secure for them. And then they can contact us if any of the information has changed. I've said that don't assume family members, friends and advisors will necessarily know where to look. This is a really key message, communication between clients and their advisors and their loved ones, telling them what there is and what they want to happen with those assets. I think that probably the option of being able to choose a legacy contact is going to become more popular. If people want to make sure that their social media sites or anything like that can still be controlled by a loved one or an advisor after they die. There's obviously work that your executors potentially can do to write to providers and try and deal with accounts and that sort of thing. But they need to be able to know what there is in the first place in order to do that. So that's, again, just this message on communication, just ensuring that executors or solicitors or advisors are aware of what assets there are. Anything that doesn't have necessarily a paper trail in your house, just make sure that someone knows where to look. And the final point is, although there's not a law dealing with digital assets and what should happen with them specifically, you can still deal with them as part of your estate planning, and you can make your wishes clear in respect of digital assets in your will or in a letter of wishes, and clients can take advice from us about what's the best way of dealing with that, whether it's a digital assets clause or something like that. That's a bit of a whistle-stop tour through digital assets, but hopefully it just makes it evident that it's something that can potentially be overlooked, but actually there's a lot of value, monetary value and also sentimental value in digital assets for clients, and it's something that we're having to have a lot more conversations with our clients personally about now. And I'm sure, if you have any questions, I'll be happy to answer them at the end. I think it's over to you now, Emily.
Thanks, Rosie. Thank you. I think I always find that quite interesting. It always makes me think my digital housekeeping is way behind my personal digital housekeeping, that is. But anyway, I think it's always good to be reminded about some of the issues. So thanks, Rosie. So I'm going to, obviously one aspect of being lawyers is giving advice, and I think Rosie's given us a really good rundown of one area that's sort of really fast moving. Another aspect, of course, as we probably everyone on this call has in common, is engaging with clients, is communicating with clients. And one, really, it's stating the obvious to say that if we're not engaging and communicating well, then we're not really going to be able to give them the best advice. And we have, as with all law firms, we have newsletters, we have other communications and ways of engaging with the client community generally. But we, in particular, have been quite interested in how do we better engage with the next generation, and is this through some sort of digital means? And I think one thing that I just sort of quite like to talk you through today, which I'll come to at the end of my section, is a platform that we've got, which we think is quite an interesting way of engaging with them. So I will come to that right at the end. Rosie, if you just flick onto my to the first slide if you can. It's going to let you. This concept, so when I'm talking about the next generation, I'm talking about obviously sons, daughters, stepchildren, nieces, nephews, grandchildren, whoever you like, of families that we might have advised for generations really. And the reason why it's such a key issue is, of course, because the next generation is in no way guaranteed to want the same advisors. They might not follow in the footsteps of their predecessors with many things or any things, in particular choice of advisors. And we probably all experience situations where either because of miscommunication within families or miscommunication with advisors, the next generation has chosen to move on or go in a completely different direction. This concept of wealth transfer that's on the horizon is something that I think has been talked about quite a lot in the wealth management industry generally. The concept that the baby boomer generation in particular has seen an enormous accumulation of wealth, and within the next few decades, I think really within the next 10 years, we're going to start to see quite an enormous transfer of wealth from that generation to the next generation. And that means that we need to be all more aware, I suppose, of that risk of not engaging with the next generation. So I just put on the slide some of the reasons, of course, which were fairly obvious to most of us, but why there is this wealth transfer on the horizon. House prices, increasing markets, life expectancy, health improvements, and all of that. And I don't think the lawyers have been particularly good at addressing or thinking about this issue, to be honest. I think probably you're all streets ahead in terms of thinking through how you deal with the wealth transfer idea and putting in place ways of setting that up. So I think generally the financial services sector is pretty good on it. I think lawyers have sort of, for some reason, we felt like we don't need to. It's almost, that we have some sort of position because we might hold boxes of dusty deeds for a family. We might think that means that, we've got their interest and engagement, and we don't need to particularly move on and engage with the next generation. But on the next slide, I'm just going to talk through three ways that I think we as lawyers and probably as professionals in the financial services industry generally should be engaging with the next generation. Rosie talked about communication. I'm going to talk about communication. It's got to be the top one, I think, obviously as a matter of good practice in general. But I think it's amazing when and if you do ask the next generation about this, which I have recently on one particular family who's directly addressing this issue. They feel that they're not being communicated with enough. It's amazing what sort of comes out of the box, as it were, if you really kind of delve into that. And it's so important. We all know the impact of good communication within our own families and within our own professional communities. So if the next generation of clients don't feel that their advisors are speaking their language, then obviously they'll become disconnected, no matter whether their families are communicating well with them and telling them what they think they should be doing. If the next generation themselves don't feel engaged, then that won't work well for the advisors. So I think one advantage of the current situation is that we can break down some barriers. We don't need to be in the same physical location as our clients anymore. If we had recently, there might be a connection with a particular family to a certain area, but maybe the advisors are now elsewhere. We can sort of break down all those barriers and the historic situation of a family. And I have to say, the situation that I mentioned, which I'm working on, is a particularly good example of that, I think, because this is a family where we've acted for them for generations. It started out because we were the local law firm in that particular area. It's now evolved such that there's a property portfolio which is all over the country. There's members of the family that are all over the world. engaging with that next generation who are all over the world is quite difficult under normal circumstances if you have a program of kind of regular meetings in person. Of course, as soon as you take things online, it doesn't matter if I'm sitting in my dining room in Edinburgh and somebody else is sitting in theirs in New Zealand. As happened yesterday morning, very early. It's fine, you can still have these conversations just as easily and not without worrying about those barriers of location and history. So I think that's definitely up there at the top of the engagement agenda. So transparency is the next one, and I think this again has received quite a bit of attention. And what it really means is that when it comes to the thorny issue of fees, the next generation, I think, are very, very used to managing things directly themselves, or at least more used to it maybe than their parents' generation. So they might have visibility of everything that they have online for their banking, something Caroline will come back to later. But really, if they have that direct engagement with their bank when they're teenagers, they're going to expect it in terms of the other aspects of managing wealth later in life. So I do think that we obviously all keep clarity on fees at the tops of our agendas generally, and we have regulations that mean we have to do that. But just assuming that the same arrangements or the agreement that we had with the older family members will work just as well for the next generation of family members isn't necessarily going to be the case. So I think being as agile on that as possible and trying to think of different solutions to helping clients see what's being charged and what's being done for them is a great way of proceeding. And I've got an idea on that, which I'll come back to in just a second. So here we are, my technology example. So if you could just go on to the next slide, Rosie, but if you just wait before you press the play button, which will hopefully work to set off a video here. This is something that I've been working on for a while, which is, I think, quite a useful technological solution. So to the issue about engaging with the next generation. So for years, lawyers have had corporate deal rooms where documents would be stored, different parties would access them in the run-up to a transaction. But we haven't really focused on how we can use that sort of technology in the same way that other wealth management practices have by creating a platform for a family's affairs. So what we've got here is just a demo, and there are quite a few live versions that I'm working on. But essentially, Rosie, if you just set us off, this is on a platform called HiQ. And if you follow the pointer whizzing around the screen, you'll see that what it allows you to do is set up an online portal. You can invite clients, you can invite other contacts, set up your own profile, and that will allow them access to the site. Then you can personalize it. So what we've got for this particular client is this is a demo obviously, but we've got property portfolios. So we've got then it will go through to the map of how their property portfolio is structured. It also the locations. These happen to be our offices, but it can show more details in there, like terms of leases, review dates, and that sort of thing. And you can obviously also pull this data through from where the property managers provide their reports. We've then got a WBD team section. It's a bit like a kind of online accessible address book for people. So if they need to contact us, there we are. There you are, Rosie, in all of our glory. And we can get in touch with us easily. What we've also got is a task section. So the task bit, I've put in a few kind of made up examples there, but I suppose the task section is there really just to give people clarity, visibility on what's coming up. You can assign them to different people, and then it will come up in their notifications and their emails. We've also got events. So suppose it's a bit like having an online family diary, but here this is more like a family business diary, and that'll click through to events that are upcoming. Again, you can the family can have access to that to input the data if they want. There's a few different views. I think I've picked the list view, so you can see, just in case they forget that somebody's getting married, that's in the diary on the system for everyone to see. So you've got a key contact section, so we've got a couple of WBDers on there, but of course there's space to add extras, so there's plenty of scope for putting in other advisors, putting in, trying to join up the different people who are involved. And then the document section, which really is going back to the original setup of the data room, but to be honest is one of the most crucial parts of all of this. So historically you might have documents stored in archives or even scanned into our systems. But here, of course, people can access things directly online. They don't need to go through their solicitor or the secretary or anybody. They can see things if they want to. If they want to check what they've got in place, they might want to look back at set of accounts or investment report, or just simply remember what's in their will. If they want to look at their letter of wishes and add something about that digital asset that's been bugging them, they can have a look at that and then get in touch and let us know. So that's probably the most well-used section in the live examples that I've got at the moment. And then going down a bit, I talked about transparency on fees, and I suppose this is a good example of how you could do that. These are completely made-up numbers, but this we can set up to pull through from our financial systems, so that clients can have good visibility on fees and where they're at with all of that against the estimate. And of course you can set the system so that not everyone has visibility. If there's other people on the site, you don't need to access the feed section, you don't have to. And you can sort of tailor it to your needs, however you want that to work. And then going down, you'll find this section probably the most entertaining, because I've just sort of made up some investment asset allocations which are completely unrepresentative of what would be in most sensible portfolios. But really it was just to show off some snazzy graphs and let you see that you can pull data through from all different sources onto here. So if you've got an investment meeting coming up and you want to be able to draw the family's attention to a certain thing, you can use those functions. So I hope that's been interesting. You can pause the video now because we've sort of got to the end of that section. So I hope that is just a bit of an insight into some of the ways in which we're trying to engage with the next generation. I think the key to it all is just to try and make it as flexible as possible, being able to build something for a particular family, rather than just setting up a sort of off-the-shelf product. We would very much treat this as a value-add part of the service, so we wouldn't generally make a separate charge for running a service like this. And certainly I think feedback from clients has been really good so far. So I think I will now hand over to Caroline, who's going to also employ some technology to give us an insight into the world of financial inclusion.
Thanks, Emily. Good afternoon, everybody. I am delighted to be speaking to you today. I'm going to touch upon one of my favourite subjects. For those who know me, it is financial inclusion, which isn't really normally a type of topic that you would necessarily relate to high net worth or wealth clients. But given the focus of Emily's talk in technology, I was going to start. So I'm going to do my talk in reverse a bit. I'm going to talk about open banking more generally, and then I am going to then go on to financial inclusion side of things. So as Emily said, I am a legal director in the financial services team. So unlike Emily and Rosie, I don't tend to act or advise individual clients or families. I am more advising the regulated firms for their compliance with regulation and law in relation to the services that they provide. So in terms of open banking, it's quite similar to what Emily said in terms of the high-T site that we've got. That's all about communication and transparency and making it easier for customers or clients to understand all of their key dates, all the key things, how their portfolios are made up. And open banking goes one step further. There's not been too much in the wealth landscape in terms of open banking, but I did find an example, so I'm going to have a brief interlude to let you have some classical music, but also just to show you there's a pilot site that kids are piloting at the moment, and so this is just going to show you a bit about their open banking solution. Do you want to click on Rosie and we'll see if this works? Oh, I don't think the sound is working. Wonder, it's maybe not a bad thing if the sound isn't working. Not to worry. Anyway, I'll just talk over the sound. I was gonna let you enjoy the music. But as you can see, this is the advert that Coots are promoting for their product called Coots Wealth Portrait. And from the ad, I find it quite difficult. I'm not really sure who they're trying to target by the ad, or maybe it's that all Coots customers you play musical instruments, but who knows. It's quite interesting that they're really promoting this, and they've got this kind of snazzy new ad that they're promoting on the website for it. But in terms of how it works, it's like all open banking solutions, and the Coots Wealth Portrait is going to turn into a bit of a dashboard like the one that Emily showed you. However, the dashboard will link into a customer's banking and lending and investments held with other providers. So it should give them a snapshot in time, and so a customer can see exactly what's going on across all their providers, rather than just being like an online banking portal for just their Coots accounts. So the problem is with this type of solution is the solution's only as good as the APIs that sit behind it. I'll go on to APIs to explain that a little bit later, but basically that's what kind of taps into the different accounts. So this one, it'll be interesting to see how many investments they can pull through, because it's not mandated for investment firms at the moment, but we shall see where it goes. But I thought that was just quite a nice example of somebody that's kind of trying to be innovative in this space. Do you want to move on, Rosie? So in terms of open banking, you should probably have heard the phrase over the last couple of years. It's definitely been a buzz phrase. But in short, PSD2 is where it evolved from, and that is the Second Payment Services Directive, which is a piece of European legislation that was brought in to kind of level the playing field within Europe in terms of the banking space. It was kind of brought in for competition purposes to try and improve competition throughout Europe, but also to help customers understand their banking situation a bit better. If you're not familiar with it, that's okay, because whilst it's mandated for retail banks, it's not mandated for investment portfolios and pensions at the moment. So how does it work? Well, it is a consent-based access to a person's current accounts, savings accounts and business accounts via application programming interfaces, which you might have heard APIs. Basically, it just means that there's all these feeds going out to the various bank accounts, which pulls it in and gives like a snapshot of that. But it's got more uses than that, but that's kind of the primary one where it seems to be much more beneficial for customers and kind of helps them understand their financial position in kind of one place. So as I said, there's no mandate for access to be required for investment portfolios and pensions. So the immediate impact on your sector is probably limited at the moment. But there is some outliers, and there are some companies who are trying to push boundaries and take advantage of the infrastructure that exists there to kind of have that edge. I think in terms of open banking itself, for your, I thought it was useful to go through the benefits for firms like yourself, and then talk about the benefits for customers, which goes on to the financial inclusion side of things. So as Emily said, the new generation of clients are usually quite different to their parents, and they're much more digitally savvy and they've got a hunger for speed. So through open banking, firms can engage these clients, and it can essentially help them grow their customer bases for these types of customers. And it's not just about servicing existing clients, because if you're able to feed into these open banking dashboards that are created by banks, then it may be that a customer is more inclined to use your services if you have got an API going into that, and it means that they'll be able to view their portfolios with you as well. In terms of the benefits for firms, it helps engage the next generation, but also can give you a much better, deeper understanding of your clients. I think being able to access clients' financial and transaction information can help you really bespoke your advice to them, so that you can ensure that your investment strategies, for example, are much more tailored, because you've got a holistic view of the customer's financial position, including their spending patterns. And that's the type of thing that Kate's trying to tap into there. And I think there's a couple of other firms like Investec and Fidelity are also launching something really similar to try and tap into this and show themselves to be sort of the cutting edge of this type of technology. In terms of process optimization, again, it's down to being speed, doing everything digital for customers. There's a number of providers who are providing sort of AML, your customer onboarding experience, and it can all be done at a click of a button, which again is optimal for these types of fast-paced digital-only clients. So that was just kind of a whistle-stop tour of some of the benefits for financial institutions, but for customers themselves, open banking has got many benefits. I would say at this point, actually, open banking hasn't really been the success that they thought it would be for retail banking customers. So from a retail perspective, it's all been set up so that a customer can just kind of have a dashboard. They can see their mortgage, what's outstanding in their mortgage, their savings accounts, their ISAs, their current account. They can see all of these types of things on the one dashboard, but actually there's not that many people. There is a lot of people who've obviously taken advantage of it, but I don't think the numbers are as much as they estimated it would be. But one of the for wealth customers, one of the benefits of open banking is potential financial inclusion. Do you want to pop on to the next slide, Rose? Perfect. So for those who are not familiar with the term financial inclusion, here is the UK's definition of it. So financial inclusion means that individuals, regardless of their background or income, have access to useful and affordable financial products and services. And I think for the purposes of wealth clients or high net worth individuals, the highlighted area is the real key component, because it's regardless of their background or income. Now, I speak to a lot of people and do a lot of advisory work around financial inclusion, and the majority of the time this is looking at the poor or vulnerable customers, the customers who are really struggling to perhaps access cash because of branch closures or lack of ATMs, or customers who are really struggling to get access to banking accounts. And there's a whole host of these cohorts of customers that are really struggle to access financial services. But there's also a huge amount of wealth customers who also struggle. And the reason that they struggle is because, as you'll very well know, looking at the things that you do, is that a lot of these customers are asset rich but cash poor. And if their assets are tied up in property and investment, they maybe don't have the usual day-to-day finances coming through, or the steady flow of income that would allow them to have access to mainstream banking services. I also have seen that a lot of the private banks have started to up their limit in terms of who can access their services as well. So not only might they be struggling kind of at the mainstream level, some of the private banks are moving away and becoming out of their reach as well, which is kind of gives them a bit of a double struggle. So I thought it would be quite useful to show you how this. I've got a couple of stats to show how this looks in numbers. Rosie, do you want to click on? So if we were in a room, I'd be asking you what these numbers represent, but I'm just going to go through and tell you. But so 44% of high net worth individuals have found it difficult to access credit. That's credit overall, whether that be loans, overdrafts, mortgages, that type of thing. 38% represents the numbers who have particularly struggle to get mortgages. 12% have actually been turned down or declined for a mortgage, and 11% have been declined for a loan or overdraft. Now, these numbers are crazy when you think that these could be millionaires who just simply can't get a simple mortgage for a residential property that they're looking to buy. So it's not even just these products that I've mentioned the stats for. We've spoken to multiple high net worth clients who've really struggled to access things like credit cards or even a mobile phone contract because all of these things you usually use some type of credit check or credit history or they look to have a steady income flow. So why does this problem exist in the first place? Well, as you'll probably all know, it's really down to the rigidity of the credit risk strategies of financial institutions offering these products. It really goes against how high net worth individuals kind of funds or how their wealth is held. And because regardless of the amount of wealth, it's often the credit risk strategy will require a steady flow of income to be coming through your accounts to be able to kind of get through the tick box exercise of saying, yes, this person is not a high credit risk, we will lend to this person. And so how can open banking help with this? Well, open banking, whilst I was kind of focused on the kind of the snapshot, the portfolio, the kind of a customer being able to see what the accounts are, open banking also can open up new credit risk opportunities where financial institutions are able to get a more holistic view of someone's spending. As an example of this from a non-wealth perspective, there's been requirements recently that like council tax and rental payments are taken into account for normal customers to be able to help them to access credit, like mortgages, for example. Because at the moment, if a customer is to apply for a mortgage, then the bank will take the information that the customer gives at face value and then will look at the credit check online. The credit report online won't actually help the institution who's looking to lend under the mortgage to understand that this customer, the biggest outlay for the last 10 years has been their rental payments, and they've never defaulted once, because these types of things don't tend to get reported. So opening up new ways to do credit checks has potentially got the opportunity to allow more people to access this type of credit. But whether or not this is actually going to be a hit or not kind of depends on the banks. And banks have seemed to have the kind of sort of reluctance to update their credit risk strategies, because it'll essentially mean that they'll decline more customers. And whilst it's from a responsible lending perspective, looking at this data and having a fuller and more true understanding of the customer's kind of affordability, it's probably a better thing from a responsible lending perspective. It's actually an issue for banks because they'll make less money because they'll just simply have to decline more customers. So I think it's going to be a while until some banks do update their credit risk strategies to take into account the open banking data that's available to them. There is some movement, and there's some outliers, some fintech or some sort of challenger banks who are moving in this space and just using different data to be able to do their affordability checking. And I know that in Edinburgh University there's quite a lot of research going into this space by one of the maths departments, and they're looking at things like your credit risk profile being dictated by your social media use and the friends you keep and your activities online, which is quite a frightening and terrifying thought for most, I'm sure. But it might actually be more truly representative of your risk to a bank. So yeah, for a wealth customer's perspective, open banking might be the answer, having more data available to banks to see the broader picture, to see actually how much assets and wealth a customer might have. behind the scenes, which is not evident on a day-to-day review of a customer's account account, might help them, but I think it's probably a long way off. I guess it's a wait and see how these things go. I think that's all I was going to say. I don't think I had any more slides. Sorry. No, that's it. That's it.
Yeah, great. Thanks, Caroline. That's brilliant. Well, I might at this point hand over to Carol just briefly and see if you've got any initial thoughts and if you want to nominate anyone to ask any questions or I haven't had any specific questions come up on the chat, so if anyone wants to ask any or just make any comments or really interested to hear your views on any aspect of what we've been talking about. Carol, you might need to unmute yourself if you want to just say a couple of words. Oh, we might have lost you. Have we lost you?
I think I sent everyone to sleep. Sorry about that. I mean, everybody likes a lunchtime nap.
Absolutely. Don't worry. Well, I'm not sure if we've lost Carol. I can't quite work it out from the list of participants. Rosie, I'm just wondering if do you need to unmute anybody?
I can unmute people. It looks like at the moment all the participants other than us are on mute. So if anyone does want to say anything, you can always unmute yourself by clicking the mute button on the
Can you hear us?
Yes, we can.
Thanks very much indeed. That was so interesting. I just was looking at my notes. I really enjoyed the fresh perspective on legacies from Rosie. Emily, I was really wowed by your family portal. I haven't seen anything like that. Very, very impressive. And then, of course, I'm really intrigued by that set of statistics that Caroline provided on financial inclusion or not for high net worth individuals. It's very, very helpful. Thanks very much. Now, I was going to call out a few people for questions. I don't know, have any questions been submitted, can you tell me?
No, I haven't had any questions on the chatter.
Okay, well, perhaps people can take the opportunity now to consider their thoughts and put some questions to you. I'm going to ask, is Craig Joyner on the line?
It looks like he is, but currently muted.
Craig, can you hear me? I was going to suggest that Craig might have a question. I don't know if you can hear if you ask him. No, you can't hear from Craig. How about Sean? Sean, are you there with a question?
Hello.
Yeah, we've got you, Sean.
Yes.
Oh, good. I suppose one of the things for me is or one of the interesting things is that, as you said in your talk, open banking hasn't taken off with quite the vigor that was anticipated. You see a change in the velocity of uptake in all of these new services more amongst the young or in the population more generally. Just to see how quickly you'll move towards this brave new world. Your thoughts on that?
Yeah, it's interesting because obviously when PSD2 was announced a couple of years ago, it was like all systems go, and there was a huge amount of work for financial institutions to get everything in place to make sure that they had the APIs there. And then some banks at that stage, or some financial institutions, then decided to not just permit the access into their accounts, but then set up their own portals and stuff. But I think overall it's not been as big a success as they had hoped for. And I think generally people were thinking that actually maybe this was the year that it would be pushed a bit more, because there's more and more sort of players coming in to do the sort of dashboard snapshot type thing. But obviously this year has been a bit of a write-off so far, and obviously there's been a lot more to focus on instead of people setting up or then accessing new accounts. So in terms of stats between new and old, I'm not sure really how it looks, but I know that some of the people that we've dealt with, it's been a younger cohort of customers who've been taking use of sort of the portal thing. But I think there's two ways to do it. I think the portal thing's not been kind of, for the dashboard hasn't been as successful, but I think some of the challenger banks the way that they've set up, the way that they do things has been much more attractive to younger generation. For example, in banks like Monzo, and the way that they can track and spend, and you can have your pots and stuff. We're seeing that those types of accounts are much more popular with younger generation, rather than then going down the open banking route. So they're kind of like a one-size-fits-all type solution. So yeah, it would be interesting to see, although people, I know that banks like Monzo aren't doing as well as they have been this year, certainly, and so it's just an interesting one to watch.
Yeah, certainly from my personal point of view, I bank with a couple of bankers, and I've got a few challengers where, using things like a Revolut card for, spending when we all used to go abroad, if anyone can remember. Yeah. But for me, when it first came out, the more traditional banks that I bank with, I noticed a flurry of activity around, advertising when you went up to the online banking systems around open banking, and that all seems to have fizzled out. Maybe it's just, because I didn't to their request, but, when you log in, you kind of get a prompt to do your ISA or, do this. And for a while, it certainly was the flavour of the month was promoting open banking, but I've not seen that for a wee while. I don't know if that's just maybe my demographic that have decided that I'm too old and crusty to bother with.
No, I think you're right. I think there was a huge push, or a huge amount of effort went into to get the kind of pipes in order to get these things up and running, but then actually it hasn't been that popular, so there hasn't been a push, and whether that's certainly this year, I think a lot of banks have been focusing on other things. They've got enough to deal with without promoting other projects or other services that they're involved in because of all of the COVID-related forbearance they've had to push through. But yeah, who knows if that'll change towards the end of the year next year. It's definitely not been the success that they thought it would be. There's something interesting that you touched upon, that you use your Revolut for your abroad spending and things. I think COVID has really brought that to the fore in terms of a lot of people have got their sort of challenger young snazzy banks as their sort of spending accounts, and so the people like Revolut, Starling, Monzo, I think the incumbent banks are not seeing them as such a threat, because over the last few months the use of those types of accounts has gone completely down, and I think it's because a lot of people will retain their kind of incumbent bank, their big four RBS, Lloyds or whatever, and then just transfer a portion over each month as their sort of spending money, and because of obviously people have been spending a lot less day to day in terms of coffee shop spending and that over the last few months, I think the use of these types of accounts has really gone down. Just something interesting to say, picked up on your abroad spending comment, but I think that's generally there's been a massive decline in use of those types of accounts this year.
Yeah, I have two grown-up children, and they use their Revolut cards very differently from the way that I use mine. So they, all use it as they cover their outgoings in their main sort of big four bank. And then if they're going to go out for a night out, they'll load their Revolut card with what they want to spend. I would never think of doing that type of stuff, but I know they do.
Yeah.
Which is actually very responsible, isn't it? I mean, that's a very sensible way of doing this.
It's again, this kind of comes back to the type of kind of customer base that Emily and Rosie were touching upon, and how much more digital savvy the younger generations are. And these types of products are completely tailored to that generation. So I don't know if you're familiar, but with a Monzo account, for example, if you and all of your friends have got a Monzo account and you go to a restaurant, you can then, one person can just pay the bill and then hit split bill, and you select the people who are there who've got a Monzo account, and Monzo will do it all for you. So if Emily, Rosie and I went out for dinner and we all had our Monzo account, I would pay, and then straight away Monzo would pull a third of the price of the meal from Emily and Rosie's account straight into mine. And it's that type of convenience and fast kind of digital fingertip. That's it all done. I don't have to use my calculator. I don't have to think about it. It's there. It's done. It's happened. I don't have to think about it. I can move on. It's such a kind of a common mentality amongst these types of clients.
I think one other thing that
they do that. Unfortunately, when the kids and I go out, they refuse to accept the split, and it still stays with us.
I think just one other thing I was just going to add. Sorry, Sean. I think a key point really here is that we've kind of got to the stage now where that next generation they know enough to make technology work for them. I mean, I feel sometimes that technology is making my life harder, or it's making me work harder. But actually, I think there is a generation that they have just been brought up with it to such an extent that they can make it work for them, and in a way which makes their life easier. And so I suppose it's trying to work out how, as professionals, we can through our own platforms, which we might think, well, if it was me, would I just maybe prefer to get my bank statements, or would I just, even on an email now seems old-fashioned. But I suppose it's trying to tap into their way of thinking, which is probably that there is no way in the world that I would ever want to receive anything on paper ever again. Thank you very much. So I suppose it's shifting our mindset to keep up with that.
My colleague Richard Burnett has been trying to get through with a question. He's not dialed in on telephone, but can't seem to unmute himself. Are you able to unmute callers? Is there a button that you can press at your end?
Oh yeah, Rose, you can probably do that, can you?
I can't see which one he is, but I'll just go through and unmute everyone.
Richard Burnett?
There's a few callers. Oh, we can now, yes.
Good, fantastic. Very good. Is there any legislation on dormancy for digital accounts? I'm aware, of course, my bank account, if I don't look at the statements after a number of times, it will put a red flag there. But there are other accounts that I have, there's less money in, but things like the papers. I'm just wondering, there must be a load of dormant bookmakers accounts and other accounts all over the place where people have died and their relatives don't know anything about them.
Yeah, I think that's right. And when an executor is going through the estate administration or probate process, part of the job is to do as much investigation as possible to try and identify these accounts. But I think you're right, it's not always possible if you don't know where the information is to locate the account. Then you don't kind of know where to look. But I do know that there's a service called My Lost Account, and so you can input some information about a deceased person and kind of tick certain banks where you think they could have had accounts, and this service then contacts those banks to investigate for you. So there are ways of trying to dig around, but it can be part of the job, I think.
Oh. And then the other thing is, in terms of the law, what law would be broken if basically when I die I've left a list of all my small accounts with the passwords and the login and everything, and my executors just basically went through, signed on using that data and sent the money to my bank account, because it would ultimately have to go through my bank account, as a way of collecting all the funds. Would they be guilty of fraud or theft, or what?
You just got to be, I'll just jump in, you just got to be really, really careful on that one, because there is a distinction between, Rosie mentioned the sort of insurance risk of invalidating policies because you've written down all your passwords, but then it's quite a leap into executives actually accessing accounts as if they were that person. Obviously, all the institutions have policies and procedures in place, but they need to know that somebody's died before they can kick off those policies and procedures. Executors might be very tempting, and certainly I absolutely know that this happens all the time. And some institutions also, most institutions also know that it happens all the time. But to be honest, no matter what sort of headache it is, ultimately, executors have got to be careful to be sure that they're acting as executors, not by sort of effectively impersonating anyone. Obviously, they know they died because they wouldn't be acting as executors otherwise. And the main issue being, which Rosie will, I'm sure, have some experience of, if there's a dispute on the estate in the future, and whoever's disputing the estate is compiling evidence about misconduct of executors or whatever, something like that, which might have just been for ease or simplicity, or just because it was too much red tape to have to deal with, or filling in all forms, could look extremely bad and might well be illegal. So just tread very, very carefully, I suppose.
Can I just add on that one, just from my experience of working with banks, it's most banks these days have got a Slack process now for what happens when a customer, they're made aware that a customer has died, and I think over the last couple of years it's got a lot better and it's a lot more consistent and that's down to information sharing. So historically, there were some banks where you would have to phone up maybe 5 different times if the customer had 5 different accounts. So if the customer had a mortgage, you'd have to phone the mortgage number to confirm that there has been a death and then close down the mortgage, and similarly with their credit card and their savings and an account account. But actually it's getting a lot better now in terms of information sharing and not just kind of banking brand between banks as well. So it should be a lot slicker process than it has been in the past.
And I think that the same is probably true actually on, we haven't really talked a huge amount about power of attorney, but certainly that was always, a major concern for people, was how on earth am I going to get control as an attorney of all the accounts. But again, I think particularly when the new form of power of attorney in England came in, that just kick-started a whole review of within a lot of the banks about how these are dealt with, and I think that's a lot better than it was. So certainly that whole process as well is improving. I think.
Yeah, all the banks have got their kind of verbatim word by word kind of word maps and things, and kind of like those mind maps in terms of the treatment of power of attorney. Suddenly come in, we've been charged with drafting a few.
Yes, I was going to say, I'm sure you've got the banks usually written some of them.
It can be quite difficult though, because it's generally the front line, and it'll be call centre, the private client side of the call centre that's dealing with them. So it can be quite difficult. So it's really important that all these processes are mapped out really easily so that people don't get confused when they're dealing with them.
Do we have any more queries? Happy to discuss anything.
Hi, it's Mark from London. I've just got a couple of questions just on the younger generation to deal with. Just how important sort of app-based solutions are in terms of banking or asset management. How important do you think some of the younger generation feel on that? And also, you mentioned how younger generation feel differently to their parents in terms of the transfer of wealth, etc. If you are a person probably 60 plus, and you've been invested in markets over the last 20, 30 years, you've seen huge sort of compound annual growth. You've been in a normal sort of strategy. I'm just wondering if you think, so when you speak to the younger generation, whether they still have that patience of accumulated wealth in that kind of manner, or they wish to sort of be a bit more aggressive, and they do get kind of So they like the sort of things like Bitcoin and cryptocurrencies that are very, very volatile and can make them a huge amount of money in the short term, but they also lose them a lot of money. I just wondered what your thoughts and discussions have been on that.
So that's those are two really good questions. I mean, just picking up the second one, it's really interesting because actually I feel sometimes that I have as many conversations with people in the next generation who are actually more conservative than their parents in terms of investment than are less. So I wouldn't necessarily say, in my experience of dealing with that generation and having these sorts of wealth transfer conversations, I wouldn't say that just because they're younger makes them necessarily more adventurous. And I'm sure you'll see this in sort of risk questionnaires and all the rest of it. I think going back to maybe the first question, I do think that it has an impact on sort of levels of control that people like to have. And funnily enough, what I'm seeing is quite becoming more and more of a familiar picture, is where the older generation, they might have been quite willing to kind of give over control, whether it's investment management or land management or whatever it might be, or cash management, to an organisation. The younger generation, I think, as I said, just because they've been very used to dealing with a range of accounts themselves, they quite enjoy it. They like making the technology work for them. They've, in some ways, I've found, been less willing to sort of give up that control to a professional. And it maybe comes on to the question of sort of active versus passive management, and whether the next generation are behaving quite differently in that sense and becoming more passive because they are sort of not engaging somebody to make those investment decisions for them. So I think you see a range of different situations develop within different families. But I feel like we have to be as agile as possible to try so we don't expect one outcome for every family. We have to sort of think that even within, different siblings, they might approach something in a completely different way. So we need a solution for everybody.
Great, thank you very much.
I was just going to say, from kind of just more generally speaking, in terms of app functionality for banks and lenders, I think often without an app or if an institution has an app with limited functionality, it can certainly be kind of cause them to lose a bit of competitive advantage, because apps are so important to customers that we're seeing. And so much so that there's so many banks get just complaint after complaint after complaint about their apps, whether it's not functioning properly or if it's just generally an app with limited functionality. So I think to maintain a good competitive advantage, I think apps are really important generally in the banking world. And I think that's intra-generational as well. I think it's not just the younger generations who are using the app-based solutions for their banking or their credit products.
Okay. Right, thank you.
Any more queries? Carol, do you want to sort of pull anything out of that? We're sort of probably coming towards the end of our slot, so
yes, I just want on behalf of my colleagues to thank you so much, all three of you, for such a thought-provoking session. I'm sure that we'll have a good chat afterwards between ourselves, my colleagues and I, and we'll come back to you if there's anything further that comes to mind. But that was absolutely brilliant, so thank you very much indeed.
Good. No, well, thank you all for coming. And yes, as I say, we'll circulate the recording after the session. So if you do want to pass it on to anyone who couldn't attend, then do feel free. But thank you again, and we'll keep in touch.
Thank you. Bye-bye.
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 Bye.